Good afternoon. My name is Eric Levinson, Head of Business Development for VinaCapital, and welcome to day 3 of our investor conference. Now, today is dedicated to our Vietnam Opportunity Fund, which we call VOF. It's a $1.4 billion U.S. London-listed closed-end fund, and we're here today with Andy Ho, our Chief Investment Officer. Now, VOF is unique in that it takes a private equity approach to public equity investing. And what we mean by that is, of the approximately 30 holdings, 22 of the holdings that we purchased privately or pre-IPO. What's also unique about VOF is that we're not forced to sell the holdings once they go public. And so the investors and shareholders are able to enjoy the gains when it's a privately held company as well as it's a publicly held company. And so in today's session, Andy and I are going to talk a bit about the strategy here in Ho Chi Minh, and then we'll be joined live with Khanh Vu, Portfolio Manager, and Ismael, Pili, our Head of Research, who are in London visiting with clients. And so with a little bit of prayer and a lot of technology, we'll actually be able to sync them in from London. So Andy, why don't we get started? You've been managing private equity in Vietnam for 15 years. And so first question that people always want to understand is, how has investing in private equity changed in Vietnam over the last 15 years?
Thanks, Eric. Yeah, there's been a lot of changes over the last 15 years, and rightly so. The economy has grown dramatically over the last 15 years, and so businesses have grown. So the obvious changes that we've seen is the size. The size and the opportunities for us to invest has changed dramatically, which really means that our check size has to increase. We used to invest around $5 to $10 million for each investment. Now we deployed about $30 to $50 million, and the last one we did was $90 million into an investment. The second major change that we've seen over the years is the maturity of management. Management have grown over the years. A lot of folks have been educated abroad, have come back, and they've also been trained by multinationals and have left multinationals to help run Vietnamese businesses. And obviously, technology adoption has made a lot of impact on businesses and how they've developed over the years. And then the third point, most importantly to us as well, is the exit opportunities. We have better visibility to exit now than we did many years ago.
Is that based on the health of the stock market, or is that based on more international firms wanting access to Vietnam, so the maybe non-IPO but strategic exit is more attractive as well?
Yeah, I think it's a combination of both. I think the general thesis is that there's been a high level of interest in Vietnam in general that has attracted a lot of foreign indirect investors, and that as a result creates more liquidity in the stock market.
Interesting. So, one of the things that people look at, particularly because, public equities have been on a huge run the last 12 and 18 months, is private equity still as attractive? And so as you think about, the investments you made 10 and 15 years ago, the investments you made the last year, and as you think about your pipeline going forward, is the alpha opportunity for private equity still as attractive today as it was 10, 15 years ago?
I certainly think so. I think the deals and the opportunities that we look forward at the moment, our pipeline, is really focused on companies that I call of high quality. And the fortunate thing is, by applying a private equity approach, we can actually verify the quality of their business. We have due diligence. We look at the legal side, the financial side, as well as the ESG side to verify that these are quality businesses. And when I mean quality, we're looking at businesses that have quality management, quality products and services. It's sustainable for the long term. We are making medium to long-term investments. So quality is key. And second, we also want to make sure that the businesses that we look at are simple in terms of their business model. I've seen a lot of complicated business model as well as simple business model, and I have to admit that over the years, the simple business models tend to outperform. And it's easier to understand, and easier to understand where the value proposition is.
So, as you think about that, one of the comments you made earlier was the increase in ticket size. So as the fund's grown, and as the economy has kind of grown as well, the opportunities have gotten larger. So the opportunities are larger. What about the sector breakdown? So as you think about, the sectors that you were investing in, I don't know if it's a sector or industry that you were investing in 5, 10 years ago, and you think about the last few years, in the next couple of years, has the evolution impacted the sectors, or are there even kind of new entrants in terms of, areas that private equity is now viable?
Yeah, as the economy grows and over the last 15 years, like I said, the country's gotten a lot bigger in terms of its economy. That in itself has created more opportunities and less opportunities in various sectors. For example, 10, 15 years ago, we would have been very bullish and very excited about investing in the consumer space. Now, it was simply because the income per capita has been rising, and it continues to rise today. People are getting wealthier and wealthier, and they're going to consume. But the problem nowadays is that Vietnam has opened up so widely for international players, you have a lot of competition. And so domestic businesses find themselves competing with a lot of multinational in the consumer space.
Right. So when I go to the malls, I don't see, I see Adidas, I see Nike, I see Zara, I don't see the Vietnam
story.
Yeah.
Yeah. And not only the clothing or the shoes, but the food and beverage items as well. And here's the hard part. A lot of these multinationals have very low cost of capital. And as a result, they can do working capital investment, they can do CapEx investment, they can do marketing, they can do a lot more and have more flexibility relative to a domestic business.
And they also have the brand recognition already built in as the incumbent, which for, I think, the consumer space is really important.
Yes. So in short, consumer used to be attractive. Now it's still attractive from a consumption income per capita, but it's less attractive from an investment perspective.
So the trend is absolutely there. It just may not be as investable as one might think.
But then said differently, you mentioned earlier, what are the other sectors that are changing? Well, we're seeing a lot of excitement in the material space. Steel, we have a big company in our portfolio that produces steel, the #1 steel producer. Real estate still is a very strong sector. Multinationals have come to Vietnam, but the domestic players have outshined the multinational because they can produce the goods at a lower cost.
Well, in another area, knowing your portfolio that I think is probably worth mentioning is healthcare. So as the economy has grown, as GDP per capita has grown, healthcare, which is really kind of an optional expense, sometimes it's not, but most of the time it can be, healthcare should be a much more attractive sector going forward.
Yes, we like healthcare. We think it's a very attractive sector. But again, healthcare can be also viewed as a consumer story. Like, for example, we used to be big investors in pharmaceutical. We invested the #1, #2, and #3 pharmaceutical company, and we sold all our positions to strategic investors. We have moved out of the pharmaceutical business, but now into the services business, into hospitals, clinics. Why? Because, again, the multinationals have come to Vietnam, and they make it significantly harder for domestic players to compete. At the same time, service provision hospitals, Vietnamese businesses, Vietnamese hospitals can compete, and they do very well.
And that's local.
Yes, that's local.
That's important. Okay. Now I'm going to pick up on one, phrase or word that you said earlier, which was ESG. So in all of the calls we have with our global clients and prospects, the question comes up in terms of ESG in Vietnam, ESG in the portfolio. So maybe spend a couple of minutes on how you think about ESG. I know that ESG has always been part of the VOF portfolio. We maybe haven't been the loudest voice, but if you think about how you can engage and the transparency you get as a private equity investor versus, say, public equities, maybe spend a minute on the process, and then give an example on how ESG has been employed or been used inside of VOF.
Yeah, this is a great area. VOF takes ESG very seriously, and as a result of that, every single investment that we make in terms of private types of investment, negotiated investments, we actually bring in an international firm called ERM to do due diligence on the business. And now ERM is able to say, look, this type of business has a certain level of risks in certain areas. This type of business have other risks in certain areas. So they'll be very focused on different types of risks depending on the type of businesses. But what's key is they've identified the weaknesses. They've identified areas of improvements. And then our job is to make sure to convince the sponsor to make those improvements. And that's where we see the value add. So the improvements then can be made before we invest. That's called condition precedent. It can be made after we invest, condition subsequent. But then if they promise to make the changes after we invest, we have to associate that commitment with penalties. And our shareholders agreement allows us to put in penalties in the case that they're unable to live up to their commitment in terms of ESG improvements.
And so, oftentimes people talk about an integrated approach or approach to inclusion. What's nice about this and the private equity approach, we can truly change behavior as part of the process, as opposed to, we'd like to engage. Here, it's contractual in terms of you're getting this amount of capital that's contingent on exactly making these changes.
Yeah, and it gives us a lot more comfort to look for businesses that for lack of a better word, weak in ESG.
Yeah.
Because when they're weak, there's a lot of room for improvement. And then when there's motivation to make the improvement, there's a lot of value add as well. So we are unafraid to approach those businesses that are weak. Whereas in the public equity, there's more of an assessment role rather than actively getting the sponsor to make changes.
Yeah, and actually one question that we've been asked as well is, when you have these conversations with CEOs and entrepreneurs, are you finding that they're interested in making these changes? Because you may be the first person that said, hey, your business is great, but here's something that you may not want to invest in, but you really need to.
Yeah, the short answer is yes, we do have to convince them. But we're fortunate in the sense that, like I said earlier, the maturity of management has changed dramatically over the last 15 years. So a lot of these folks that used to work for multinational understand ESG's value. A lot of folks have been educated abroad, understand the ESG value. So in short, we do have to train and educate, but the process is much easier.
Nice. Now, as we think about this, and we're already kind of looking at a post-COVID world and the kind of the world is behind us, what does your pipeline look like, if you can talk about it, for 2022 in terms of, without naming names, I suppose, but is there a pipeline, indication you can discuss?
Yeah, at a high level, we have a very strong pipeline, about $270 to $300 million worth of opportunities. And I have to admit, over the last 3-4 months, because of the COVID restrictions that Vietnam has been under, we have been a bit hesitant to issue term sheets. We want to see how management have navigate themselves through this difficult period. We also want management to be realistic in terms of how to project the revenues and cash flows and earnings in the next 1, 2, or 3 years in light of the world we live in today, right? So those two items require time, and so we are now approaching what we call a post-COVID world, or we're living with COVID world, and I think management's beginning to recognize how they're going to run the business going forward. Now we can re-engage with them again, and perhaps in the next 1, 2, or 3 months, issue term sheets to invest in these opportunities.
We talk about the enthusiasm is back in Ho Chi Minh, the energy is back. I think what we can also say is there's also a greater sense of clarity around earnings and business models. So, last question, we're going to go over to Ismael and Khanh very soon. Just want to ask you one quick question on performance. I know Khanh and Ismael will spend more time on that, but so as I said earlier, public equities have been on an incredible run in Vietnam. The index up 20+% through the first 9 months, was up 15 last year, and active portfolios have done even better. And so how do you think about the VOF performance last 12 months? I believe the share price reached a 52-week high recently. But how do you put that in the context of kind of versus public equities?
Sure. Our strategy is to deliver returns in the medium to longer run that outperforms our peers and the benchmark. At the same time, we want to deliver less volatile NAV movement. If you look at our standard deviation over the last 36 months, it's about 18%, while the market ranges between 25 to 30%. So from a standard deviation, our NAV is less volatile. If you look at the Sharpe ratio, we're at about 0.84 over the last 36 months. Again, the market is about 0.5 to 0.7. So from a return over a risk perspective, we like to think that we're delivering on the medium to longer term. But I think more importantly, and we don't compare ourselves against the VN index or the benchmark, but more importantly, a large component of VOF is public equities. And that component, that's about 70%, I believe, at the moment. That component in the fiscal year, or the financial year ended June 30th, 2021, delivered 100% return. Calendar year to date, in the middle of October, we've delivered just the public equity component alone, 47% return. Again, we're not comparing VOF against the benchmark, but just to give you a sense that by participating in VOF, you also enjoy the upside of public equity, while you also enjoy the private equity exposure.
Well, and you get the stability as well as kind of the different return stream. And so, I think sometimes people look at the comparison because publics have run so much, but in the reality is private over time has certainly delivered the absolute return and the risk-adjusted return.
And what's on top of that, like the cream, the icing on top of the cake, if you will, we pay dividend.
Yeah.
We pay 2 to 2.5% per annum, and we give back between $50 to $70 million a year to our shareholders in the form of share buyback and dividend. So we're actually making money. We're actually giving it back to our shareholders through that cash flow.
Well, terrific. Well, Andy, that's a great way to begin the conversation. Now we are going to bring in via satellite, I suppose, or Zoom, Khanh Vu. Khanh is a portfolio manager on the VOF portfolio, and Ismael Pili, our head of research. And so they're going to walk us through. VOF just published its fiscal year annual results. So Khanh, good to see you from London. And do me a favor, could you please maybe walk through a couple of highlights from the earnings with our audience?
Good morning from London. Yesterday, Ismael and I landed here in London. We're at Numis's office here in the city. And this morning, we have released the results for VOF. So sort of prayer and timing, it worked out. So hello there in Vietnam. This morning, the results were released. And as Andy mentioned, it's been a very successful year for VOF. The NAV has increased to 1.36 billion under management. If you think about last year, we closed last financial year, 30 June, at 876 million. That represents a 66% increase in NAV on a total return basis. And similarly, on a share price basis, total return basis, we're up 67%. A lot of that growth and that gain, we've been able to return back to our shareholders. If you recall, since 2011, we've had a share buyback program. And then in 2016, we introduced a dividend to pay to shareholders on a semi-annual basis. Today, we remain the only fund that continues that program. So last financial year, ending 30 June, we returned 58 million to investors, of which 38 million was in the form of buybacks and 20 million in the form of dividends. We also increased our dividend payout. In March this year, in recognition of the strong first half year performance, we increased the dividend. So for the last financial year, we paid 11.5 cents. Yesterday, the board announced an additional dividend for 30 June year end. That dividend increased to 8 cents, so a significant increase. And again, that's a reflection of the strong NAV performance of the underlying portfolio. Of course, as a consequence of the strong NAV performance, the discount has widened slightly as compared to last year. I guess it's a high quality problem to have, but importantly, this is why we're on the road, back on the road here in the UK. We recently were in the US to really re-engage with the investors and new investors, and actually perhaps explain how while headlines perhaps may seem troubling as Vietnam worked through its COVID pandemic the last 12 months, the market and the economy has performed relatively well, and therefore that's why we're here to help go out on the road and help narrow that discount if we can.
Khanh, thank you so much, and Ismael as well, and thanks for joining us, and I'm glad this technology has worked. I'll just remind the audience that if you have any questions, I've got an iPad here in front of me, so if you have questions, I'll be able to ask them to the team. First question's coming in regarding Hoa Phat, not a huge surprise, so to either Andy or KV. Hoa Phat is still the largest holding. It has been for the last year or so. Are you comfortable with the weight of Hoa Phat in the portfolio?
Andy, Eric, if you don't mind, I'll take that question. So Hoa Phat today in the portfolio sits around about 20%. We have been trimming. Over the past 18 months, we have been trimming our position. If you recall, last financial year, Hoa Phat was also about 20% of the portfolio. The share price has really performed well. Calendar year to date, for example, the share price is up almost 90%. We've been selling into that strength. And if you look at last financial year compared to this financial year, we've sold about a third of our position in Hoa Hoa Phat is still a very good company. It's one of the few Vietnamese companies that will deliver profit over $1 billion. In fact, Hoa Phat is slated to deliver 1.5 billion profit this year. And it is, outside of one or two other companies in Vietnam, the most profitable company. If you recall what Hoa Phat, in the story of Hoa Phat, we entered this many years ago when they were private. We took them public, we helped them grow. So Hoa Phat sort of embodies that private equity strategy that you heard Andy talk about earlier, talking about looking for good quality companies, taking them public, helping them grow. And in the process, as disciplined investors, we've been selling into that strength. The important thing, though, Eric, is that we're not forced sellers in Hoa Phat. And really, the reason why we have trimmed Hoa Phat is really from a portfolio construction and portfolio risk point of view.
So KB, just a follow-up that just came in. So if you weren't trimming, how big would the portfolio position be today?
Yeah, so today, Hoa Phat is about 250 million US dollars in the portfolio. Now, if we hadn't trimmed, that number would be close to 350 million. So again, you can see that from a portfolio discipline and portfolio construction point of view, portfolio risk point of view, we've been selling down to keep that level to 20% or below.
Excellent. And then for those of you that are seeing us and not KB and Ismael, you notice that we were joined by Michael Kokalari, our chief economist. So obviously we expect there to be a fair amount of questions about the portfolio, but if there's also questions on the market in case you missed day one and Michael's presentation, we brought him up to the stage here. Okay, second question either for KV or Ismael. So we talked a bit about the pipeline for 2022. Understand we can't really disclose much about that. Are there any recent transactions that are notable that are worth sharing with the audience, just to kind of say, hey, here's kind of what we do and here's what we've done to kind of put some flesh to the portfolio story?
Yeah, I think in terms of the pipeline, we're looking at about $300 million worth of opportunities at the moment. Like I mentioned earlier, we've been a bit hesitant to issue term sheets because we want to see how management get through this difficult period. But at the moment, we're very excited about three companies in basically three sectors. One is in a banking space. Two is in a construction material, not steel. We have plenty of steel in our portfolio. And the third would be to expand our existing hospital platform in the north. And that's three. Obviously, three of those deals aren't making up $300 million, but it is certainly over $150 million that at the moment we like, and we think that has a higher probability of closure in the next 3 to 6 months.
Terrific. And then KV, are there any transactions that are noteworthy and worth sharing?
Yeah, I think perhaps highlighting two transactions during the last financial year. One is a private equity investment. In August last year, we closed on one of the hospital platforms that Andy mentioned. It's the largest private hospital system in Hanoi, which is the capital of Vietnam. And you can imagine, like during the period of COVID, we're still able to perform our due diligence, perform the required negotiations to invest. This is the third hospital platform in our portfolio. We have two other existing ones. That gives us a total of 8 hospitals and clinics across that portfolio. So that was, we put about, that we invested in that in August last year. Another investment to highlight, which we did in this calendar year, was in private credit. The underlying company is a listed company that we've known for many years, and we were able to syndicate and work with our co-investment partners to invest into a structure that has very clear entry and very clear exit requirements. And also, the structure allows us to have an equity upside in the form of a share warrant. We put through the syndicate, we put over $90 million investment into this company. VOF alone put 45 million. Now, the underlying share price of this company has performed considerably well calendar year to date. The sector is in real estate, and alongside materials, financials, real estate has been a really strong performing sector in the market.
So I'd like to add to what KV or Khanh has mentioned. We've been very fortunate to enjoy the IPO of two companies during this year, one in January, which is a bank called OCB. We invested in this bank a few years back at a value less than 300 million. And after many years of working with them and bringing in as strategic shareholders, we were able to help them get onto the exchange at $1.45 billion
So in that case,
January.
you actually found a foreign investor and took them public.
Yes.
Kind of two wins, so to speak. Okay.
The second one, which is slightly outside of the financial year because it occurred in July of this year, was An. Is the largest laminate wood producer in Vietnam and maybe in Southeast Asia for that matter. When we entered about 3 or 4 years ago, they were making about $9 million in profit. This year, they're projected to deliver about $25 million in profit. And that one as well, we helped bring in Sumitomo Forestry as a strategic shareholder of this business, and they've gone public at around $480 million in value in July of this year. So we have been fortunate to see two companies go on to the exchange during more or less a very difficult year in terms of COVID.
All right, and Ismael, here's a question for you. So questions coming in, which is they followed, must have watched our last quarterly webinar saying, okay, before COVID, you had a certain set of concurrent themes that you used to discuss. Now kind of post-COVID / beginning of recovery, are the themes you've been positive on the same themes that you like going forward?
Yeah, thanks, Eric. The nature of themes itself suggests it's going to be long-term, whether it's going to be structural or secular. A lot of the themes, of course, have a macro overlay. And as a strategist, it's nice to be able to point the finger at Mike if it doesn't work. But the way we approach things is that we actually look at things on a very fundamental bottom-up basis. Mind you, having those themes such as domestic recovery, FDIs, infrastructure spending, those are just going to get accentuated with that rebound because they have not gone away. As I mentioned, Mike can probably elaborate on some of the points in terms of how strong these themes can play out. But we think they remain valid. As you highlighted, we have perhaps half a dozen or more concurrent themes, and that itself is not going to change just because we went through an event situation with the COVID, globally, I suppose, also in Vietnam. And so it's the structural focus that we would probably want to highlight as far as themes are concerned. Perhaps I can turn this over to Mike if he wants to elaborate on some of these macro drivers that form some of these themes.
Yeah, I think what we had talked about in last week's webinar is that all the growth drivers for Vietnam really have not changed. The emerging middle class, FDI inflows, all the things that we've just been discussing for years. But the interesting point from investors' point of view is that the COVID crisis that Vietnam has experienced, we really expect that to accelerate structural reforms and actually, in the end, improve Vietnam's growth prospects. So that's an important point, I think.
Now, so Andy, Ismael talked about themes. When you think about kind of portfolio construction, do you build the portfolio the same way? Do the themes impact what you're looking at, or is it more, let's evaluate the deals, and if the deals are right, the terms are right, the management's right, or do you look for themes?
Yeah, I think we look at all those information data points. Theme that Ismael and Mike provides to the team is very, very important. In addition, we've always had a view that we are investing in businesses that contribute or benefit from the growth of the domestic economy. As Mike mentioned, people are getting wealthier and wealthier, GDP is growing, and as people get wealthier, they're going to consume. They're going to consume at home, they're going to consume food and beverage, consume white goods. These are all sectors and themes that's more or less inclusive. And as we invest in the longer term, yeah, some themes may go up and down in the short term, but in the long term, all this will be beneficial for the VOF portfolio.
Okay. And a question came in earlier, but I was waiting to ask it, and it's a little bit of a follow-up and something that you and I were just talking about in your office. So the question from I need my glasses here, Emre or Emma. Can you please share or walk us through the process of evaluating a business and the structure, due diligence, benchmark, tools? You and I were just talking about quality businesses. So kind of walk us through, what is it that you look for in terms of the key criteria?
Yeah, I think broadly speaking, we source businesses through our relationships. As most of you have known, Don and myself have been here and with VinaCapital for many, many years now. So we've have developed relationships with many types of businesses, consultants, government leaders, etc. So that's sort of the pipeline that comes in. But we don't really knock on people's door. We understand these businesses. We understand what they've been doing for many, many years.
That's how you find them.
Yes.
How do you evaluate?
So then when it comes to evaluating, we have been able to shortcut many, many of the issues because we know the business so well. So when we evaluate them, before we come to a term sheet, we have to sit back and say, look, is this a quality business we're entering? And I'm writing a little thought piece for the team to define what quality is, whether it's management, customers, products and services,
culture,
financials, etc. Yes. And from there, we can develop a term sheet. From the term sheet, we seek investment committee approval to proceed to the next stage, which allows us to do due diligence. We'll spend money on financial due diligence, legal due diligence, and ESG due diligence. And from there, we can revise the terms of investment if we need to. But more importantly, we'd sit down with the sponsor, the management team, say, these are the things that we found. And the more weaknesses, the better. The key is they're motivated to make those changes to create value in the business. Just to give you an example, if it's an ESG issue, they are polluting the river, if you will. But they're
hypothetical.
But they're doing it within the laws of Vietnam.
Yeah.
But when we do an ESG review, we use international standards, World Bank standard, what have you, and there's a shortcoming. And as a result of that, we sit down, we talk to the sponsor, say, look, we understand you're not breaking any rules and regulations and laws, but we're an international investors. We like for you to adhere to international standards. And if they agree, which typically they do, we put in a process in place to make these improvements, whether they're done before we invest or after we invest. So these are things that we put in place to make improvements in the business. And then we look at how to create value in the business. What are the 100-day plan? What's the action items we need to do in 100 days?
So when you think of tools, is it primarily internal tools, and then like ERM, the ESG would be an external tool?
Yeah, we have to use a combination of both, right? We have a lot of expertise in the financial world, the legal world, as well as the ESG world. And their expertise comes from working with other businesses in other countries as well. And they bring that knowledge to us and say, well, Andy, these are best practices, and we ought to think about these best practices.
Okay. All right, there's a follow-up here, and specific question. Have you ever considered getting into logistics, transport services? Are there any companies of size, I guess, that you even can invest in that are still private?
Yes, we are. There are a couple companies that we are looking at, but I have to admit, it's not easy. Yeah. The word logistic is very broad. It can be owning and managing a port, all the way to an ICD terminal, into a container terminal depot, to a wet, dry warehouse, to industrial processing zone, to owning trucks that move things from the factories to the airport to the port. Logistics is very big. There is no one encompassing company that has all of that. We don't have a FedEx or a UPS here. Certainly we don't have a warehouse system that manages everything from A to Z. So we have to look at each component of the value chain and then figure out who's getting the most value in that value chain and who is the weakest and who is the strongest. And I have to admit, it's not easy. Right now, a lot of value is being created from owners of land that can rent or sell the land for industrial processing or the factories, right? But as you can imagine, as many people do that, and especially if they do it in the wrong location, there's no value creation. Right. So all that is being thought through at the moment. So in short, we are looking at it, but we haven't found anything that attractive yet.
Okay, terrific. All right, we still have a couple more questions coming in, and understandably, here's a question about COVID, but I'll go this one to Mike, which is Vietnam was late to kind of the vaccination process, and the question here is, how has Vietnam been able to get what is apparently so many people vaccinated so quickly? And what percentage is left, and what does that mean for the economy? And there's a little add-on here, which is reading about labor shortages. Can you comment on that?
Yeah, good point. The number is going up so much every day that I'm not sure what the latest is, but it's going up. I think it's there's two countries in Asia that are sort of the daily vaccination rate is the highest, and Vietnam is one of them. I don't remember which is the other. I think there's an interesting read-through here, which is that, and we were thinking about including this in our last week's presentation, but there was just too much material. But when you think about how the government and the city was able to orchestrate this mass vaccination
When you say the
campaign.
city, do you mean Ho Chi Minh?
Ho Chi Minh City and also Hanoi. I think in Ho Chi Minh City, we went in basically about 6 weeks. The percentage increase was from something like 15% of the population to boom, 70 plus, just literally a few weeks. And for me, an interesting read through about that is it gives you some feeling or some sense about how you can organize the workforce in this country. And this is one, it's a periphery topic, but it gives you a sense of like why this is an appealing destination for FDI companies to come here. Because this just gives you a sense about how you can mass mobilize. On the other topic about the workforce, we're already seeing people, there have been some articles on that topic, but you already see people starting to come back to the cities. The government has this scheme where and this is partially on the advice of us and others that gave them the advice, hey, let's come up with a very simple criteria for what it means to be in the red, high risk, yellow, medium, or green, and they've come up with the scheme for that for the country. And so we think that probably after the Tet New Year holiday, you'll see basically all the workers come back. They're already trickling back, and after the New Year's holiday, we would expect basically all to be back.
Yeah, if I may add to that. One of the things that we've seen over the last 12 to 24 months, if you will, is that there's a high level of trust in the government. The people does trust the government significantly. And in combination with restrictive movements and the trust of the government, there's a motivation to get vaccinated, right? So the people within Ho Chi Minh City and Hanoi, they're very motivated. The hurdle wasn't getting people to vaccinate. The hurdle was just getting the supply of vaccine into the country. And today I just read that the U.S. has donated another 2.4 million vaccines from Pfizer. So it's very helpful. In terms of the labor, we have been talking to some of our investee companies and factories. What we're hearing is that people do want to get back to work. Unfortunately, there's a lag between the first vaccination and the second one. When it comes to AstraZeneca, which is the predominant vaccine, it takes about 8 to 10 weeks between the first and second shot. And further to that, there's another lag of 2 to 3 weeks. So they still have to go through that time frame before they can come back to the factories.
And by the way, thank you to Emre for sending us the statistics. Is 75,552,642 total doses administered per, so basically 76.96 doses per 100 people. Right. And it is interesting because I remember a few months ago, there were the statistics that it was like 1,000 shots had been administered, and if that pace continues, we'll get vaccinated by the year 2093. And I didn't really like those things where they projected stuff out, because what happened was the vaccines got here, people were mobilized. So kind of be careful of averages, so to speak.
And now the daily vaccination rate is so high that when I didn't see it for a day or two, all of a sudden it's popped up by a lot.
Yeah. All right.
Eric, I just wanted to say, the Ho Chi Minh City in particular, and also in Hanoi, sort of the two, Ho Chi Minh being the economic center in the south, double vaccination rates are over 80%. It's almost 90%. 100% of eligible people, adults and above, have at least one vaccine. And that's really important because when we got to that level by early October, the government began to open up the economy. So social activity, economic activity resumed. And it was quite an important trigger, when we got to that level of vaccines. The research team, Mike and Ismael, we look at the COVID mobility data on a weekly basis. And you can see this very significant inflection at the end of September, early October, as people got out of their houses. Residential activity declined, and the hockey stick for economic activity improved. And I think that's, Mike, you've talked about this. September, October is that the inflection point where we see Vietnam truly open for business. We're back, we're open for business. I mean, the fact that we can get out, travel freely because we're fully vaccinated is a huge testament to the efforts that have been made in the last 4 months, where, in June, we were at 0% vaccinations. And the other important thing is that, FDI continues to flow into the country. On a commitment basis, so not what's been dispersed, on a dispersed basis, it's declined slightly because people aren't able to bring their managers into the country, dig a hole in the ground and pour concrete in it. But on a commitment basis, we have not seen that decline. And so, that's really important for us because you see a lot of the headlines saying that, because of the labor shortages, factories are relocating out of Vietnam, but, manufacturing growth has increased. Sales are looking to recover, and FDI has really not taken the dent. We're not seeing it in the figures, perhaps, as you see in the headlines.
And I think this gets, KB, thank you. I think it's back to Michael's point from last week, which is the trend of whether it was China +1 or going to Vietnam. COVID has maybe slowed down a bit of it, but not really. It began to expedite in the beginning, and now it will be coming back. Andy, here's a question towards you. You touched on this a bit in the beginning of the conversation. As you think of kind of post-COVID, earlier we've talked with the portfolio managers on the listed equity side who were talking about digital transformation as a key theme, kind of exports as a key theme. Earlier, there was a question here about logistics. As you think about the industries that are really going to benefit from domestic consumption and a recovery, and I know we don't invest for the next 3 to 6 months, are there industries that you're hoping you'll see more opportunities in maybe not only addressing the audience, but maybe potential companies if they're watching, particular companies that you're like, I really hope I get an opportunity to do this?
Yeah. Look, to be honest, I have a desire to participate in many sectors, right? We used to be a big investor in education, for example. At the time, we invested in international school, but now if I have a chance to invest in domestic school, domestic private school, I think that's a great area to participate in. Unfortunately, we just haven't found a brand name, a reputation, a management team that we can align with for the long term.
Back to the due diligence question.
Yes, we emphasize a high level of emphasis on quality. A brand name for a school is tremendously important. And I really want to invest in a school where the parents feel that their children have a place to go to college that they can be proud of. Right? This is the problem. A lot of private schools graduate students that go to university, not even domestic, is because the domestic university is very competitive. Yeah. They can't get in. Yet they go to these international colleges around the world, which I've never heard the names of. And it's sometimes disheartening to hear that these students aren't able to get into the top schools. So we would like to focus more on investing in school, but then changing it and increasing the quality so that their students have a chance to get into top schools.
All right. Any other hopes, wishes, dreams?
Yeah, the other area we like to look at is consumer finance. Okay. We have looked at several times in consumer finance. It's a big type of businesses in Asia in general. It can be very difficult to manage, but there are a couple very successful ones in Vietnam. Sure. And we may have missed the boat on some of these bigger ones, but hopefully in the next 5 to 10 years, we'll have more opportunities.
Right. And a question just came in from Chris. And this is a great question. I think it's interesting in general. So are we seeing any technology companies in private markets that could be opportunities with the fund? And I guess that means they also have to be at a certain size.
Well, when I look at technology, I came with a technology background, as some of you know. I came from Dell Computers. Technology to me is a tool, right? We don't really look at technology companies. We look at businesses, normal businesses that want to take advantage of technology to enhance their customer touch and feel and experience, as well as reduce costs, right? So I look at businesses like banks. How are they allowing the customers to access financial statements and financial transactions online through the phones? I look at hospitals, for example. How do we get healthcare via using technology more effectively and safely to the patients? So to me, it's not about technology companies. It's more of investing $40, $50, $60 million into a traditional businesses that are very smart and acute at about using technology to their advantage.
So technology is basically what helps them either become more efficient, become a better disruptor.
Yes.
But in all of the companies, whether it's a hospital chain, whether it's Hong Kong, there's a technology component to it.
Yes. I have to admit, it's fairly hard to start out as a technology company and find your way to compete against the traditional businesses, because we're not, to be honest, we're not in the United States, we're not in Europe, we're not coming up with novel ideas. We are simply taking what technology has been proven somewhere else and trying to make it work in a place like Vietnam. And in order to do so, typically the larger companies will have the capital, the customer base, and the motivation to spend on technology, and therefore they will be successful at it. As a startup, you'll find it fairly difficult competing with the traditional businesses when they want to get into technology.
Yeah, and it's interesting because, again, as a reminder, when people think about technology, at least in the public markets, there's kind of one leading company, FPT, which is still less than 2% in terms of market cap, and that's the leader.
But see, one can look at FPT as a technology company, but I came from Dell. And I would argue that Dell is not a technology company. Michael will be very upset, but
I don't think he would. It's a computer. It's a manufacturer.
It's a logistic company, right? And FPT's main revenue is to provide outsourced software development, right? So that's what they're good at. In addition, they provide the internet backbones, the last mile coverage in Vietnam to the homes and families. And so they provide, it's not a leading technology, but they're actually using technology to generate revenue, software development, to cable business, et cetera. So it's not like a Facebook developing a new social media or some of the new companies we're seeing and coming out of Europe and the United States.
All right, thank you. And this is another question. This is, sorry, fellas in London, this looks like another question from Michael. So based on what Ismael was talking about in themes and what Andy was talking about in terms of technology, is this having any impact in where you're seeing FDI announced or dispersed? And so you talked about the kind of eagles building the nest. Maybe you kind of explain what that means again. But is that having any impact in how FDI is coming into the country?
Yeah, very much so. We've seen in the 10 plus years I've been here, a tremendous shift to high tech and electronics, smartphone production, this kind of stuff. And gradually you're seeing some of the lower value added products like garments and furniture and this kind of stuff either moving to other countries or not having more inflows. So it really is focused on high tech.
Yeah. And when you talk about eagles building the nest, can you explain what that means?
Well, there's the general idea, and this actually really popped up during the U.S.-China trade war and the initial stages of COVID, when the idea was factories started coming to Vietnam at a very accelerated pace. And initially, there was a period where so much FDI was coming and so many electronics companies wanted to move here that we were having a hard time kind of absorbing all of them. And then the government put a strategy in place, building the nest. And the idea was to ramp up our capacity, logistics, infrastructure, training of workers, things like that, to prepare for all these companies coming here.
Yeah. Now, I'll turn it to KV, just because we haven't included him in a while. Maybe that goes to Ismael. We were talking earlier, I'm kind of foreshadowing, because tomorrow we'll be talking to Hugh about real estate, so hopefully he'll turn in tomorrow to day 4. One of the points that he makes is about kind of the satellite cities becoming more relevant and more investable. So, people keep talking about Hanoi and Ho Chi Minh City, but there's really kind of cities being built around the cities. When you think about that in terms of the companies in the portfolio, does the build out of Vietnam, how does VOF take advantage of that?
Yeah, as real estate has been a very important and significant part of our portfolio, even from early days. And when we started investing in this market 17 years ago, real estate was one of the first sort of sectors that, as investors of private capital, were able to access. Today, about 20% of the portfolio is made up of real estate companies. And really, it's around, sort of anchored by 2 key companies. The second largest holding portfolio, Vin Homes. What they do is they build landed property. As you can imagine, a city like Ho Chi Minh, for those of you who visited, it is built in a delta. Land is scarce. It's a city of 12 million of people. So to have a very unique product that which is landed property, it's a very desirable asset. Vin Homes, where they have been able to build along these corridors of infrastructure, where ring roads are being built as the city expands. They've got large land plots there. So this is slightly outside of the city centre, but nowadays with good infrastructure, residents there take 20, 30 minutes to get to work if they work in the city. The other large holding in the portfolio, which we've been building up over the last 12 months, is a company called Vin Homes. They are the largest real estate company in Vietnam. They're the residential developer. They're about 15, 16 billion in terms of market cap. Today, they represent about 5% of NAV of the portfolio. And what Vin Homes does is a little different to Khanh. Khanh is landed. Vin Homes builds up into the sky. They build residential townships. And what's important is that they build not just in the city centers of Hanoi and Ho Chi Minh, but they're also building out. They have several projects in other parts of the metropolis, as well as you walk through to the other large secondary cities outside of the metropolis and along the coast. Khanh, the sector itself, this year is expected to grow about 66% in terms of pre-sales. So this is, in a period of COVID when people aren't able to go out and buy, they're still, being able to, the sector itself, developers are still able to launch products. And so Vin Homes is again a reflection of what Andy said earlier. We're looking for quality companies. We're looking to invest in the long term. Vin Homes and Khanh are number one respectively in their sectors and what products they offer. They give a product that is price-wise desirable for the domestic consumer, the sort of the ones that are the urbanization stories that you heard Mike talk about, the rising income levels. And so, real estate today represents about 20% of the portfolio, and it is sort of anchored by those two holdings that held. Do you want to perhaps on the real estate sector, any other thoughts?
Yeah, I mean, for next year, we're actually forecasting real estate as one of the biggest sector drivers as far as net profit is concerned. Currently, which I know we're going to be adjusting, we're looking at about 55% year-on-year growth for net profit next year for the real estate sector. I don't think we have any kind of discerning line saying that we would prefer to buy small companies or big companies. The overall objective for all the investments, and I'm thinking not just for private, but perhaps more on the public side, it's really about the quality companies, quality management. That continues to be the linchpin in terms of how we assess companies. And I think both on the VOF side and also from our open-ended funds, we have identified a few of those things, and that has led to relatively good, and that's being diplomatic, performance for this year that we expect will continue next year.
Interesting. Thank you. And it was interesting because as Khanh was talking, a question came in about whether we preferred small, mid, or large, but you addressed it, so I won't ask it. But a question also came in, interestingly, while Khanh was talking as well. We talked about kind of the satellite cities, and that leads to the kind of the parallel or not parallel with China, with those kind of ghost cities in Evergrande. So the question is about, it wasn't really about Evergrande specifically, but are the cities built waiting for people? We talk about this urbanization trend. Yeah. We know, but if you think about it, so in China, you have these cities that are built, and if you build it, they will come, and they didn't. And so does Vietnam have that same type of thing? So when we talk about urbanization, we talk about Vin Homes and what's going on. Are these cities that are waiting for people, or is there more like they're building it on call?
Yeah, absolutely not. I mean, there's no ghost cities in Vietnam. I think Ken Rogoff at Harvard put a paper out a couple weeks ago about China's real estate bubble, given the Evergrande and everything. And I think they were saying that the vacancy rate for all housing in China is something like 25% or some crazy number. Nothing like that in Vietnam. China, I'll give you a very short story, which is that China and Vietnam
No Hirsch and Gordon.
No Hirsch and Gordon. China and Vietnam are doing some things very similar, the East Asian development model. But one thing that China is doing different than Vietnam is they're really focused on investment. So they've channeled a lot of money into investment to try to grow their economy quickly. And Vietnam is not doing that. Vietnam is prioritizing the individuals and consumption and the well-being of people. So we don't build empty cities in order to just pump up the GDP for 1 or 2 years while the construction is going on. We just don't do that here. Yeah.
So it's interesting. Like I mentioned, we're going to talk to Hugh tomorrow. Is that there's actually an undersupply of kind of what you would call traditional affordable housing, for the workers that are moving into these cities. Okay, terrific. All right, Andy, looks like back to you. So when you think about going back to the due diligence, what's most important, financial terms or management?
I think At the beginning, it's management. Can we work with them? Can we trust them? Are they able to develop a 3-year business plan and execute against it? Are they willing to change? Because our economy, our structure, our culture is changing, our legal infrastructure is changing. Are they willing to change? And also, I had a long chat with the CEO of a big bank a couple of days ago. One of the things they've started to implement was documentations of various unique transactions that they have. So they can transmit this learning to the next group of managers. So there are many unique things that happen at a bank. For example, IT, they get hacked. When they get hacked, what were the things that they needed to do? And every hack was different, right? Whether it's a branch office or head office. So now they begin to document everything and they want to learn from it. And so I think management is key. The terms are key, but I do still prioritize management. If we can't get comfortable with management, no matter how good the terms are, we wouldn't be able to do the investment.
Yeah. So I guess there's where the cliche, there's not enough money in the world to make that happen. That's probably where that comes from.
Because at the end of the day, if the management is not that strong and not good, they're not going to live up to the terms that you agree.
Yeah.
So what good are the terms?
Understood. Okay. Now, Ismael, as we go back, here's another question on themes. Do you think about themes being both kind of longer term secular and then more short term? Do you put them in a basket like that, or are they all more longer term in nature?
I mean, the word theme itself suggests it should be longer term, and it does point to that secular or structural hype that we alluded to earlier. But the way we do look at the companies is very bottom up, so we're kind of agnostic along that same line. The theme is a good way to kind of frame your investments. It's a good way to perhaps have that overwrapping ribbon on that package. But I don't think we would discern that if you think about the long-term theme, it should compound over the years. It should reach your objective, just like you make an investment. You plant, or perhaps analogy is when you make an investment, it's like gardening. You plant the seed, you expect it to grow this height, whether it's going to be 3, 4, 5 years later. Some may get there in 1 year, some will get there in 3 years' time, but they will get to that height. And so along that same line, the theme itself, structural theme, structural channel will take you to your destination. So that's probably a good way to kind of look at it. The long term, the short term will lead you towards that long term objective.
All right, thank you. And that was the final question from the audience. I think we're approaching about the hour, which is our target for these. So Andy, I don't know if you have any final comments to the audience about the portfolio.
Yeah, I think our portfolio is in a very strong position today. We've spent the last 12 to 18 months more focused. We've restructured the portfolio, taking advantage of the dip that we saw as a result of COVID, in early 2020, and we've restructured the portfolio quite nicely. What we have today is a balance of cash that we're excited to deploy in the new businesses, and we hope that we can identify the new generation of management team that have sort of seen the difficult times of COVID, the need to have good management, the need to have good cash flow, the need to have a good brand, good products, sustainable products. So we're hoping to find these types of new businesses, new types of manager in the coming years for our investment, because that's going to be what's in our portfolio for the next 5 to 10 years.
Thank you. And so everybody, thank you so much for joining us today. If a question comes up, because we're going to end the call in a minute or two. So if a question comes up in 5 minutes, just email us, just reach out to us at VinaCapital.com and we'll answer your question. And then please join us tomorrow for day 4. We'll be focusing on our alternative platform, which is real estate, green energy, venture capital, and then we'll have Ismael back as well, covering financials. Again, not alternative, but it's such a big weight in the benchmark. We wanted to just give that a focus as well. So thank you very much, and hopefully we'll see you tomorrow. Thank you, KV and Ismael as well. Safe travels.